Hello, everybody, and welcome to another episode of the Capital Gains Tax Solutions podcast, also streaming on Expert CRE Secrets podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the Deferred Sales Trust is an amazing way for you to exit highly appreciated businesses, real estate, eliminate the need for the 1031 exchange, defer millions of tax so you can create and preserve more wealth, or help your clients, friends, and family do the same. For those who don't know me, my name is Brett Swarts. I'm founder of Capital Gains Tax Solutions. And each episode, I'm joined by some of the best real estate, financial, wealth, and leadership minds in the world, where they share their ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. I'm excited about our next guest. She's out of the great state of California. She's a seasoned generational real estate investor and founder and owner of Sugo Capital, an investment company that connects investors to strong passive income opportunities. She is gifted with an eye for detail and loves to uncover the stories and data. Her background in business, analytics, and cybersecurity has uniquely positioned her to research and identify strong real estate opportunities for the Sugo Capital and up-and-coming markets across the United States. And she really finds her purpose and passion in helping others, invest and have some financial freedom and through investment, real estate, and wealth. Please welcome to the show with me, Sarah Sullivan. Sarah, how are you doing today?
Very good. Thanks so much for having me here, Brett. I am excited to see who we can help defer taxes, grow that passive income. It is totally my passion. So thank you.
Excellent. And for our listeners getting to know for the first time, would you tell us a little bit more about your story and your current focus before we dive into the topic at hand, by the way, is how to build strong passive income. So Sarah, what's a little bit of your story?
Yeah, my story. Okay, so I grew up thinking what most of you probably listening are thinking, that the best way to build wealth is to, do well in school, get a great job, go get a master's degree, MBA, whatever, go to the great school, get the great job. And so I followed that path. And one day I realized it just hit me like a ton of bricks. I was so unhappy. I was so stressed out. I was working so hard. I had climbed that corporate ladder. I was working my tail off, living in Silicon Valley, but I didn't have any time freedom. And I was living a life that was quote unquote successful by some standard, but it wasn't my standard. And so I started looking at what other people were doing who were hanging out at home during the day, which a lot of the people in Silicon Valley were. So they had either made money in real estate or they had exited, a tech startup, something like that, and then invested in real estate and were living off the passive income. And so about 10 years ago, I started studying real estate, studying what the uber wealthy do, studying what the billionaires do, not studying what my brother was doing, not studying what, my friend from college was doing. I was studying what the uber wealthy were doing and trying to mimic what they were doing to create passive income for myself. So I dabbled in all different kinds of real estate investments, lost some money, lost a lot of time. And eventually found syndications, which is completely passive for investors. It's de-risked in that you have multiple doors, not just one single family home. It's de-risked because you're not on the loan. You don't have to deal with the property manager or the tenants. It's totally hands off. So it's really relaxing. And so when I started investing in that, I noticed a feeling that came over me, like this nervous energy about money. Like, do I have enough? Am I investing it right? That was also some of the energy that I grew up with from my mom, from parents. Sorry, Mom, but do we have enough? Is it invested well? Like a bit of a nervousness energy around money. But when I started investing in multifamily, a peace came over me. I felt calm. I felt confident. I was secured, asset backed. Okay, I had some tax advantages. I had some passive income. I had some growth going on, so it hedged against inflation. I felt really calm. And so I created Sugo Capital in order to create that same energy for other people around money. So I wanted to bring, these are not like, hey, double your money in 6 months, or like you're going to have a VC exit of 10x. It's not like that. But what it is it's a base, and it creates a base for people so that they can do other things with their time. It's a secure base. It creates passive income. It's asset backed. And it grows over time. So especially for people who are looking to exit their dental practice, exit their company that they've been running, and they're used to income, you can't just go into something that produces income. You have to go into something that produces income and grows over time, so you keep up with inflation, so your net worth also grows. And so that's what Sugo Capital does. That's what we're all about, is offering investments that do three things: that provide a tax deferral. There's some sort of write-off for you. Some is in your ordinary income, some is in your passive income. That provide cash flow. All of our investments provide cash flow and appreciation. So we look to do those three things for people: reduce your taxes, increase your passive income, and increase your net worth with our investments, in order to bring peace to you around your financial situation, bring confidence to you about your financial situation, in order to create time freedom for you, so that when you're exiting your businesses, your job, whatever it is, you can go on and do some other things with your time. Maybe you want to keep working, start your next business, and then in the meantime, you're getting your passive income, so you can feel free to start that next business.
Got it, Sarah. Amazing. This is Sarah Sullivan, by the way. You can learn more about her and her amazing company, Sugo Capital, by going to sugocapital.com, sugocapital.com. So it sounds like you have a passion for bringing financial passive wealth piece to people. Yes. And you have a passion for helping people feel calm and confident about their wealth in general, right? With something that's tangible, that people are, living in and paying a rent, and you're providing a service by providing housing, which is near and dear to my heart as well, especially being from California, Texas, where I grew up there. Housing has been a big challenge for especially California, but the whole country really. But California seems to be leading in that. So let's dive right into the topic at hand about how to build a strong passive income. So what would you say, Sarah, is the number one secret to building strong passive income, and maybe define strong for us as well?
Yeah. So the number one secret, the number one secret kind of has three parts. So, but if you take a look at what the wealthy do, so you break it up into three classes of net worth. So those who have a net worth of $500,000 or less, they have like 5 to 10% of their net worth in alternative assets. Chicken or the egg, who knows? Those who have a net worth of $500,000 to $10 million, they have around 25% of their net worth invested in alternative assets. Now, those who have a net worth of 10 million or more, they have 50 to 60% on average of their net worth invested in alternative assets. And so part of it is that these are open to accredited investors. Smaller net worths don't have access. But another thing is like opening your mind to see what's possible, and really being a steward of your own money. And so once you get into the higher net worth, you're really going to want to be a good steward of your money and look at what the uber wealthy do and mimic that. And so again, they do three things. So they earn more money, they keep more money with their tax strategy, and they grow that money with their investments. And so I love what you do, Brett, and I've referred so many of our investors to you, and it kills me when it's too late sometimes, and someone gives me a call and they're like, hey, so I sold my dental practice in January. So I've got this money I want to invest with you. And I'm like, oh, wait, you sold it in January. Did you do a DST? Did you talk to Brett? No. Oh. So I'd say one of the biggest things is to, before you take action, learn everything that you can. So many people, they take action, they sell their business, and they haven't done, it's too late after the fact. And so that kills me. Or they sold it last year and they didn't deploy their capital in the year that they got their capital gains. And now the next year they're looking to deploy their capital. And so they have to pay tax on all that. So really having a good team of advisors who are in the space, who really know your situation and are an expert on your situation, is going to be super key. Because all those people with 10 million plus net worth, they're not doing it on their own. They're not learning every nuance. They're learning what they need to know in order to know, oh gosh, I'm going to need these people on my team, and go find the best people you can find.
I love that, Sarah. So the number one secret is really mimic what the wealthy do, it sounds like, and really understand that, just the data behind it. I love how you broke that down. $500,000 or less in net worth, they typically are putting 5 to 10% in alternative assets. Now, Alternative, for those who are curious, that's known as like real estate typically, right? Or different things that are outside the traditional stock market, stocks, bonds, and mutual funds. To me, though, those are the alternatives. I feel like real estate, commercial real estate, especially investment real estate, should be the primary, right? And it should be flipped upside down, and it should be the opposite. But people have different ways of building wealth and different strategies and different comfort levels. But I agree. I couldn't agree with you more. And then it's interesting. You said 500,000 to 10 million. It's 25%. That's actually a big range there, right? It's 25, and then it really, if you get over 10 million, it's 50 to 60% more. And you have a good point here. You brought up tax flow, right? It's not just about cash flow. You got to have tax flow and appreciation. And at a certain point, this wealth building machine gets moving, and it's like it has gasoline and it needs oil, and it probably needs a checkup, right? And the gasoline could definitely be cash flow, but the oil is tax flow. Like if you don't have enough tax flow strategy built in, whether that be through cost seg depreciation or buying more assets, like you're saying, in a given year, and make sure to offset the cap gains tax, or having a deferred sales trust on your exit, or using a 1031 exchange, then you can run out of, even though you could have the gas going, your taxes are going to wipe you out, right? So you got to have that. And then the last part would be, I guess the machine itself would be the team, right? So making sure you have a team of people, because you're going to need tune-ups, you need adjusting, you need to make sure that you're working. Am I way off, Sarah, or what do you think about that?
No, that's perfect. And I want to add to that two stories. So one is around the concept, like you said, of alternative assets. So, one of my investors, they have a wealth advisor at Wells Fargo. And so when we started working together years ago, they were like, oh, you're going into this risky investment with Sugo Capital. It's a multifamily apartment building. That's going to be so risky. Okay, so we suggest you deploy 10% or less of your net worth into these risky alternative assets. Okay, fast forward years later, they're doing the portfolio review with my client. My client invited me in on that review. And Wells Fargo wealth advisors were like, so your portfolio is very healthy. It's one of the healthiest of our clients. These are the returns you've received over the last year. And they were all proud of themselves. And they say, we suggest that, you do like a 50-50 between alternative and traditional assets. And I was like, yeah, the only reason it's performing is because they have about 30% of their net worth with me. And so that the risky assets that have been doing 20, 30% annualized, which are the investments with me, were making up for the losses they were receiving in the stock market with their Wells Fargo wealth advisor. Hope I'm not offending anyone, but I see this time and time again where people say, oh, my wealth advisor is, saying that you're risky. I'm like, well, what have you been receiving with them? What are the returns? Oh, it's only been negative 5%, which is good considering the market. And I'm like, no one's lost 5% with me.
100%.
I couldn't agree money with me.
I couldn't agree with you more, Sarah. And in a different stage in different people's lives too, and the different liquidity needs, different potential over concentration, all kinds of different things. But I think you've really got, as an investor, you've really got to form a strategy that you're going to understand, right? Because sometimes the stock market can be a bit confusing, and there can be so many things that are moving out of control, like what's going on with the banks right now with SVB, just as of last week, where you're right there in San Francisco, Silicon Valley, all that disaster that's going on, whether that be with, Ukraine and Russia, or that be with China and trade or political things. There's so many things that control or influence or change or can impact the stock market. But if you look at like multifamily investment properties and B or better locations, 20, 30-year-old properties that you can slowly improve over time. You can increase the rents. Like we can all get our hands around, oh yeah, I lived in places that have better schools, and I've lived in places that are, walkability scores, and I've lived in places that have, washers and dryers in the units. I mean, these are like simple things. And so the neat part about multifamily investing, it's not rocket science. It's tangible. You can go there, you can see, touch, and feel. And then likewise, if you're buying on good cash flow, now here's the key, making sure you're not having your debt, either too much and or adjustable with what's going on right now with people.
Right, exactly.
And you can be in a good spot. But number two, real estate, generally speaking, does the best in recessionary times, as long as you don't have too much debt and you don't over leverage. But that being said, I couldn't agree with you more. And I think it's now that we have these type of podcasts, now that more people are looking, I think, at the different way at Wall Street than they did before. And it is funny, the words they use, like, alternative and risky. And you're like, well, I've made a lot more, and I actually haven't lost any money in real estate since I've been doing it. I've been doing it since 2006.
Yeah.
But that being said, yeah. Any other thoughts on that?
No, you said it great. If you also take a look at what the family offices are doing in the last 12 months. So for those of you who don't know what a family office is, it's for, often people who have a net worth of 10 million or more, 100 million, $500 million. They have a team of people who are doing their legacy planning, their tax strategy, their asset protection, their investments for them. So they have even massively shifted into more asset-based investments like multifamily, like oil and gas. And they used to be really hands-on in that space. Now they've even shifted to investing with proven operators. So we're seeing more interest in family offices investing with us instead of them hands-on owning the apartment complexes themselves, because they see what a great job other people are doing. And so even the family offices are going passive and hands-off. So I think that's really cool. And then I do want to say one more thing. When you were kind of summarizing and you talked about tax flow and tax strategy. So obviously people are going to work with you when they are planning an exit, whether it's of their business or real estate or, some sort of big cap gains they're going to have. There is also, and a lot of people don't know about this, but we do have some offerings that offset ordinary income, AGI, like W-2 income. So for instance, my husband is a W-2 earner at Google. So we made investments last year to offset his W-2 income since I'm all in real estate. And so for instance, for a 200K investment, we got our K1 today. There's 175K loss on our K1. So the AGI went, his AGI is not 200, but say it was only 200. It went from 200 to 200 minus 175. So 24K is now the taxable income. So that's really powerful too, because then you can take that and invest that, and that's going to really fuel your investment strategy to save taxes, even as you're growing your business before you're able to exit it and work with Brett on that side of it.
That's a great point. It's like income tax flow, right? And so you want to make sure you have an income tax flow strategy and a capital gains tax strategy, also an estate tax elimination strategy. Because guess what? The government has a lot of different taxes. And even Biden, as of last week, was talking about taking it from 20% federal, just about 40%, depending on your income bracket. And so you also have this massive amount of wealth that's transferring. In fact, Sarah, I'm curious what you think about this. As of last week, from the Best Ever Real Estate Conference, John Chang from Marcus & Millichap spoke about the baby boomers and the wealth transfer that's happening. And I used to think the estimate was about 32 trillion. He just came out with Marcus & Millichap saying it's 84 trillion. 84 trillion by 2045 is going to pass from one generation to the next. And this is by far the largest wealth transfer in the history of the planet that we know of. And 50% of this total net worth is tied to high-end primary homes, businesses or private equity, and or commercial real estate, which are illiquid assets that are highly appreciated, which I also think it speaks to your point about these family offices. A lot of them are getting to the point where they've already built their wealth. They're already uber wealthy, but they're now transitioning of how do I pass it to the next generation and the legacy, and that legacy being I can't do it all myself. So I need to go with proven operators, diversify some of this wealth in different geographical locations, mobile home parks, senior housing, multifamily, self-storage. And they're saying we got to look for those who've already proven it, who are, full steam ahead, like we were 20 years ago kind of thing, right? Exactly. And so it's this shift between we don't want to actually have to do it all of ourselves for either liability, but also for just the sustainability of the wealth to grow with people that they can trust. It's sort of like what Warren Buffett did with Bill Gates and the foundation with Melinda Gates, right? He said, look, I've made all these billions. I did a great job of making it, but they're going to do a great job of giving it away. So I'm willing to just give it to someone I can trust. And so that's the shift we're seeing. It's because of this baby boomers, is because of all this wealth. And so all of this dynamic is happening right now. Now, here's the cool part, Sarah, that we have an opportunity for, right? And it's to solve some of the major crises in America. One of the top ones is housing. The housing crisis, right? If we can move capital from like cryptocurrency, from business sales, from high-end primary homes, or even smaller investment properties where people feel trapped in, especially in California, New York, Jersey, these states that have high tax states, and they can move them into something like a deferred sales trust, and then they can be redeployed to build from ground up development or in existing housing, right? In other words, this 84 trillion can become the fuel, right? And with the oil of the tax deferral strategy, that can actually take care of a lot of these challenges if people just have the education, have the team to execute. So what are your thoughts on any of that, or you want to add to that?
Yeah, I think it's a really interesting situation. And I think that's a really good reason for people to get their asset protection in place and their legacy planning in place. Because of the demographic of who invest with us, we have seen several of our clients and investors pass away. And so I see a variety of what happens next. And those who have, their trust set up, their everything set up and really clean, there's actually nothing for me to do. And there's actually nothing for the beneficiaries to do. It's all already set up. They let me know and I let them know there's nothing to do. And then there's those that did not set that up. And it's like an investment just in their personal name. And then what happens? And that's when it gets messy and that's when it gets difficult. And we have to have, attorneys come in and things aren't liquid. And it's more difficult for people who don't need to be dealing with that while they're grieving. And so I think it's so important knowing this, that, you do work with people to do estate planning and asset protection and setting up trusts and beneficiaries long before you think you might need it. Or, if your parents or your grandparents haven't done that, talking to them about doing that, because they may think they're leaving you a legacy and they could be leaving you a mess, or they could be leaving you a tax burden that is, with an illiquid investment that you can't get. That's the hard part, when it's an illiquid investment and you owe tax on it. Yeah. What do you do?
To that point, like Yellowstone, for example, right? That's the whole premise of the entire show. If you've seen it, Kevin Costner and the family, they're in Yellowstone, Montana. And essentially what's happening is the value of the land is over $100 million. Right. Okay. But there's what's called an estate tax, right? Which, by the way, has nothing to do with stepped up basis. This is the other side to make sure, we were a little bit critical financial advisors, traditional financial advisors. But guess where the other people are for real estate, which we can be critical of too, is they talk about this 1031 swap until you drop, right? And there's some truth to that for sure, but that only solves the capital gains tax challenge. It doesn't solve the estate tax. So imagine you're worth $54 million, or let's go back to Yellowstone. It's worth $150 million piece of land. Yeah. And if you're married right now, you have about a $24 million exclusion, right? But the rest of that, it's above and beyond, is subject to a 40% death tax. Okay. Now you can give it all away to charity. You can buy a bunch of life insurance. You can have 50 kids and try to gift it away, but most people can't get it out fast enough or in an efficient, freedom enough way. This is where we come in and we use what's called a DST plus, and we eliminate this estate tax. And without charity, without life insurance, without having to give it all away, you can still give to charities that you want to give to, but essentially you could sell that asset today. So a buyer for $150 million, eliminate the estate tax in one single day, and your kids can be the beneficiaries. And so this is not just capital gains tax or what you're talking about, probate, making sure everything is set up properly. It's actually the estate tax, which is 40% above and beyond anything that's, it has nothing to do with stepped up basis. So I want to remind people that you can go to capitalgainstaxers.com to get your estate tax solution plan going today, capitalgainstaxers.com, as well as your capital gains tax plan. Any thoughts on that, Sarah?
Well, I also like the DST because, people who are like, hey, Sarah, I'm selling my portfolio. I've been actively managing single family home, like 30 single family homes and, 18 condos, and we're slowly going to 1031 exchange them. What do you have available for me? And I'm like, oh, that sounds like a headache to do those one by one, or even if there's a couple at a time. But say you sell 10 and you roll it into one, one investment with one 1031 exchange, you're not able to diversify and you're time crunched. And so you might not be able, and we see this all the time, people don't find exactly what they want. They 1031 exchange into something that doesn't replace their passive income, or it doesn't meet some of their criteria, but they need to do it because they need to do their 1031 exchange. And then it's like a month later, we have an investment and I'm like, oh, hey, George, now we have something for your exchange. And he's like, I already did it. It's too late. Had I been able to wait another couple months, I would have gone into yours, Sarah. And so I love that the DST, the structure that you help people with, it takes away that time pressure. So it does two things. You can diversify into whatever you want. It doesn't limit you to real estate, right? You can diversify, you can get out of real estate and then diversify. And then also you get to take your time and choose what's right for you instead of rushing into whatever's available during those 45 days that you have. So I think it goes along. The reason I identify so much with it and what you're doing is because it matches, what's in my heart for investors is finding peace and calm about your money, and like rushing to do 1031 exchange. Nobody's calm and peaceful. But if you go into a DST with Brett, then take your time, do what you want. And so it really opens the doors for people.
You nailed it. Thank you for that, Sarah. I appreciate it. And I do see the value and the alignment there for sure, because at the end of the day, we want freedom for our clients, whether that be their time, energy, stress, or their finances, the diversification, liquidity. But the best thing is optimal timing, right? Where you can invest high, invest low, and hopefully sell high, and then just continue that. And that could be into stocks, bonds, and mutual funds. That could be into real estate, passive or active. It could be development projects. It could be just sitting in treasury bills right now. I mean, things are kind of crazy right now. I mean, at least you go, well, I put in treasury bills, it's 4 or 5%, and the government has to fail for the money to go. That's how kind of crazy these times are right now. But the key is, what do you want? And what does make sense for you? How do you diversify? How do you make sense of the tax flow game and the cash flow game and the appreciation game? Well, hopefully you will consider, after listening to this, a deferred sales trust by going to capitalgainstaxsolutions.com. That's capitalgainstaxsolutions.com. That being said, Sarah, are you ready for the lightning round?
Oh, yes, there's more. Bring it.
All right. Knowing what you know now, if you could go back to your 25-year-old self, what's the one golden nugget make sure to tell yourself to do?
Ooh, 25 years old. I was definitely not thinking about investing. So I would have started investing way earlier, and I would have not, instead of double negative, I would have considered my own business earlier. I was not open to the idea that there was could be something better than a W-2 job. And I thought that owning my own business would be way more stressful, and I just couldn't do it. And in fact, it's less stressful, and I make like 10 times as much money. So maybe I couldn't have done what I'm doing at 25, but at least I've been prepping and open to that could be a door in the future. And that so much is available to us right now. I mean, you could start almost any business that you want online. And the wealthiest people I know are business owners and real estate investors. So if you have it in you and curiosity, go out and find how you can, start your own business in a kind of a low time model, because it's just a really fabulous alternative way to make money.
Very inspiring. What is the one thing in the next 90 days for your business that if you could knock over that big domino, that big challenge, would make the biggest impact for your next till the end of the year?
Yeah, so it's team building. So with massive growth and scale, you need to scale your team as well and train them up to hold, the values and the culture that align with your team. So that's the real focus that we're doing in the next quarter, because we just have hundreds and hundreds of investors pouring in for our investments every month. Being able to maintain our quality of service, our investments solid, but then like all the support, that's what we're really looking to ramp up. And that's going to be a continued focus. As companies scale, you need to scale the team. So
awesome. Number one book you've recommended or gift for the most in the past year?
The Big Leap, or Big Leap. I don't think the word "the" is in there, but it helped me identify where I was creating ceilings for myself, whether in my personal life, in business, in investing, in relationships, where I was self-sabotaging, even though like it was totally not, I didn't think I was, but then when I read the book, I was like, oh, and we all do this. We all put ceilings or blocks or limit ourselves because we have like 200 times more negative feeling receptors in our human body than positive receptors. So we tend to go in that direction of block safety for, from evolution. And so trying to figure out how I can shift and be in the positive, like everything is possible type spaces.
Yeah, I just learned this morning that the amygdala and the brain, like there's the positive and there's the negative, right? And the negative side is twice the size as the one that's positive, negative. Like there's one that's positive and negative, the one that's all negative.
Yeah.
Right. And so the premise was, or I think it's kind of been proven with science, is that generally speaking, the negative is twice as impactful, or even maybe 5 times as impactful than the positive is. And that's where all the things that are challenging for a lot of us. And it makes a lot of sense. I was like, oh, that makes a lot of sense, you know?
Yeah.
So
And it was meant to keep us safe. And that's why we've evolved to be the way that we are. But now life and society is different. So we get to purposely try to evolve our own brains ourselves.
yeah, a lot of truth to that. Last question, since we're out of time. So Sarah, first of all, thank you for being on the show, and thank you for sharing so much with us today. We've covered a ton of great content and great wisdom. And so I'm curious, after all the people you've helped, building the wealth you've built, by the way, some crazy cool stats too, just pumping Sarah up here a little bit here. They have over $800 million of assets under management. If you're wondering what a rock star Sarah is, an average of 33% annualized return for investors. And they've done this with 24 properties acquired, which is pretty amazing. She's been seen on Forbes, MarketWatch, Digital Journal, Fox, and she's head of part of the Forbes something Wealth Council. Anyways, all kinds of really cool, smart stuff that I didn't even touch on the break. But anyways, after all of that, Sarah, or the beginning of the show, after all of that, how do you best stay centered in your values and stay encouraged to charge forward to reach even higher heights after you've accomplished so much?
Ooh, good question. Really focusing on what the numbers in my business mean. It means that, I was just interviewing someone for a new events planner in our team. And so it wasn't about like number of leads. It was about number of investors. It's about number of lives changed. So you could think like 10 more clients. Okay, that's boring to think about. 10 lives changed. Like people only invest it with us if it's the best thing that they found, right? If they find something better, great, go find something better. But that means we're the best thing they found. And so we're changing lives. And so thinking about that anytime it's like, oh, I'm tired or I'm stressed out, or I don't know if I want to grow more. And I tell all my new hires this, like, it's not a number, it's a person, it's a life that we are changing because we're bringing calm energy to their life. We're allowing time freedom, consistency and passive income and wealth growth all in one. So that's just such a great honor that we get to do that.
Amazing. Sarah Sullivan, I want to thank you for being on the show. I want to encourage you to keep using your gifts and talents and grit to help people create and preserve wealth through multifamily real estate and everything you're doing. And so with that being said, if people want to find you, would you mind one last time, what's the best place for them to find you?
SugoCapital.com. It has all my contacts in there, how to book a call, SugoCapital.com, SUGO Capital.com. And our investments are on there as well. I'm happy to talk to anyone, strategize. That's really fun, is strategizing. Like, what are your goals? Where are you now? How do we get you from A to B? That is super fun. And I've worked with thousands of investors at this point on these, developing a strategy for their investments, and have a huge network of people like Brett who can help you out. So, usually once you find one good person, you get their network of good people. So I love to help out anyone who wants to strategize on how to get from A to B and get that passive income and financial freedom.
Awesome. Thanks, Sarah. And I also want to thank our listeners for listening to that episode of the Capital Gains Tax Solutions podcast, also stream on Expert CRE Secrets podcast, where we believe most high net worth people and people who even just trying to grow wealth, right? They struggle with clarifying what options are available for either exiting their businesses, crypto, real estate, primary homes, and or options that are available to be able to, build passive wealth if they're still in W-2 and they want to get some more income coming in and not have to work for it with spending your time for it. You can have someone else like Sarah and her team do the hands-on work for it. If we can help you at all, by the way, if you're exiting, you can go to capitalgainstaxsolutions.com. We do have the new book. This is it. This is the final edited version here. And it's launching on Kindle, I think Kindle Fire next week-ish, okay? And then the hard copies are coming out. Like, this is finally happening after like a year. It's called Building a Capital Gains Tax Exit Plan. And we have the Kevin Harrington from Shark Tank in the book and some of the other really smart people. I have a couple chapters too. I encourage you to please pick up the book, show some love, as well as go to capitalgainstaxsolutions.com if you want to get started in your exit plan today. I appreciate it, everybody.